County now. I worked these problems a little while ago, probably about an hour ago, and I'll admit I made a couple initial mistakes, so hopefully I won't make them again. But so we're gonna do some governmental accounting. This is accounting 4340, okay? And let's start with a quick devotion. This is Wednesday. It's April Fool's Day, April 1st. And this person lives in Colorado. Her name is JJ Hannah. All right. Here's a little message here for April 1st. It's the time of year again when rain and wet are the only constants. Preparing for the day's weather comes down to two options: sandals or rain boots. In the same way, rain brings one of two moods: childlike joy or grumpy retreat. I think for me it's probably grumpy retreat, right? As I walk in the rain, whether I'm prepared for the weather or not, I have a choice. I can either be annoyed every time I get a little wet, or I can jump in a puddle and enjoy nature's spontaneous splash pad. The same is true of my attitude toward what God is doing in my life. I can gripe about my circumstances and groan about what's in my path, or I can shrug and jump feet first into the puddles along the way, taking joy from the little things and thriving on the journey. So that's a good little message, right? Especially now, we get to see these crazy times. Stop along the way if you can, and enjoy the little things. I mean, obviously, it has nothing to do with our message, but even like a silly movie like Zombieland, what was the moral of the story? Let's enjoy the little things, right? Like when was it Woody Harrelson had his Twinkie? He was enjoying the little things, right? So try to do the same in these crazy times, and also think about our attitude as we go forward. There's people out there, seniors, whether it's college or high school, that are they going to get a graduation ceremony and graduation parties? They're missing their senior sports, high school sports year for the spring. And it's troubling, right? It's tough. But then if you think about it, there's, back in my father, who he's passed now, but when he got out of high school, there was no college for my father. Instead, there was a couple years in Vietnam. So, not trying to equate the two, but just put it into context. Not everybody gets that after senior year of high school fun summer. Some people don't get that, and it looks like this year some of the seniors might not get that either. So, anyway, we're going to do some governmental accounting. This is the Chapter 7 end of chapter questions I'm going to do with you. Essentially, it's financial statements. We got two cash flow statements, and we got essentially an income statement balance sheet for our proprietary funds, even though it's not technically a balance sheet and income statement. Okay, so the first one here, number one, is a internal service fund, which is one of our two types of proprietary funds. You get your enterprise fund, then you got your internal service funds, and all this data here is to help us to kind of put the pieces together to form a working cash flow statement. Again, remember in the notes it says we have to use the direct method, and nobody likes the direct method. At least I don't. Good hiccups now. I prefer the indirect method. That's how I was taught. That's what I don't even remember if there was a direct method back then in the early 90s. There probably was, but I don't remember learning it. If I did, it didn't stick. But anyway, the first piece of the puzzle is up here at the top, where it says that the city had a beginning balance in cash of $895,635. So this is going to have to go down to the bottom, right, where our starting cash is $895,635. So down here, our beginning number is going to be that $895,635. We'll go ahead and put that in there, and I ain't going to worry about it anymore, right? It's done. So we'll just go through these one at a time. Now, there's one or two of these that I don't like where it is, and I'll try to point those out when I get there. So the first one is interest received on investments. This is going to be out of the three types of cash flows. You got your operating, your financing, and your investing. So this is going to be investing income. So it needs to go in the investment section. So that's going to be what? Interest on investments. So we have this non-financing and financing, non-capital, and let me see if I can say it again. Non-capital financing and then capital financing section. So it's a little bit broken up there, but when we get to it, it's fairly straightforward. But we're down here in investing. So this is going to be our interest, investment income, interest received on investments, right? This will be a positive number because it is an inflow. It is a incoming cash, 42,400. So there's our first number on our statement. Let's keep going into the second one, number 2. We acquired additional investments, equity investments, totaling $75,000. So we got down here in the same section, we get to this purchase of investments. There it is, purchase of investments. Now this would be a negative. We bought these, so negative 75,000. Now from the problem, I know that these are the only 2 entries in this section. And one thing I don't like about this is this wording is not correct. You see this wording right here, net cash provided by investing activities? It should be used by. So there's an error either in one of the other ones that I'm going to show you later, or it's just wrong. It should be used by, right? So we know that because it's a negative cash flow, it should be, the terminology should be used by investing, not provided by. So there's definitely an error in this program somewhere, or in this problem. Because those are the only 2 in that section. And if I check my work, I think it'll show me the green check. It does not. But there's no green check here, but that should be the only 2 things in that section. All right. Let's keep going. A grant was received from the state, and this is for salary, so it's going to be non-capital, right, for paying for interns. So this is going to be a positive state grant, and this is going to be in the financing section, because it's not operating income, right? It's not really operating activities. So we'll put that as grant down here, grant from the state, and this is what, $50,000. This is non-capital financing. Okay, so that's a little bit of a tricky one that we're might not be used to. Now here we got receipts from sales of goods and services. This is our cash from our customers, essentially. Obviously, because it's not an enterprise fund. It's a internal service, so it's customers or other governmental entities. But this is our cash from customers right here, which is going to be the 2915500. Okay, so that's our cash from operating activities, or cash received from customers. Payments to suppliers. So this will be cash paid to suppliers, right? And this will be a negative, right? This is a negative, so this is going to be the 16. So negative 1642100, right? So there's that one. Next, we got cash paid to employees. So we'll put employees down here. This would be a negative as well. Negative 479,300. Okay, going down to number 7. Equipment was sold. And the book value doesn't really matter because we're doing direct. There's not going to be a gain or a loss on the sale of assets included in the top section, so we don't have to worry about backing it out or whatever. So this here is just a distraction right here. Don't get discouraged by that. That's trying to trick you. Here's our cash that's coming in. Now, I immediately tried to put this down in this section, okay? And this is where I put that sale of capital assets. I did this, again, it's going to be wrong by the computer. And what is this, 57.5? So, and if you think about it, if this was the right spot, then this would make sense. Okay, this provided by would be right. But it's not, okay? It needs to go in this capital financing section, which doesn't make any sense because why is it financing? Because it's it's an investing thing. When you dispose of assets, it's in the investing section. So maybe this is the problem, but essentially I'm going to put it where the computer wants it because you want the right answer, which will be up here. So the proceeds from the sale of capital assets. This is a capital thing because it's capital assets. 57,500. I'm going to remove it from down here. Oop. Excuse me. All right, so we're finished with that one, and now we're going to transfer to the general fund. So this will be a non capital financing issue. Okay, so transfer to general. This will be a negative 25,000. We sent some cash to the general fund, so we'll subtract it there. What else we got? Oh, other expenses. Other expenses, so we'll put other right here. And that's going to give us, this could be a negative, right? Because it's a cash payment for other expenses, 89,200. And that leaves us with one more, which is long-term debt payments. Now, this is capital, so it's capital financing. This will be a negative number. So down here, principal, maybe principal. Proceeds. Let's see, debt payment. Debt payment sounds probably good enough. We'll do a debt payment. Remember, this is negative 525000. Let's see if we made any mistakes. It's possible, right? Nobody's. Oh, where'd my beginning number go? I thought I put it in. Huh. Let's put it back in. 895365. Wait a minute. 635? 635. Now let's see where we're at. I might have an error somewhere. I'm not. No errors. Perfect. Okay. So there's our first cash flow statement complete and correct. Okay. That one actually wasn't very hard, right? Nothing very hard here. I will warn you, when you do the Chapter 7 quiz, there are some journal entries that I did not cover. That's on purpose. I want you to have to actually use the resources of the textbook to look at the entries that they gave you to try to figure out those entries. Now, if it comes back where, half the class can't figure it out, then I'll come back on and I'll go through that problem. But until then, I'm expecting you to do it by yourself this time. All right, so let's go on to number 2. Now, 2, 3, and 4 are all connected, so they're all going to kind of weave in a little bit. So 2, 3, and 4 are all one example. We'll use those same numbers for each. It's a good example because it kind of ties them all together. It ties our 3 statements together, which is what happens in for-profits as well, right? So this section here, 1 through 7, is really for the last one, which is the cash flow statement. For the most part, we don't need this until we get to number 4. So we'll use the pre-closing trial balance to fill out 2 and 3. Okay, so this is actually pretty easy. So operating income is first, which would be charges for services, right? So our charges for services will be our operating income, and that is $2,040,000. So $2,040,000. Okay, so that was pretty easy. And this next one remember, so we're doing an income statement. So if I could draw a line, it would be, well, I don't want to do that. That's our income statement right there, right? Those accounts. So it's just a matter of plugging those accounts down below and you'll get it right, okay? Now, there is a little bit something to do with this because you kind of have almost like 3 equity accounts. We got a restricted, we got an investment, we got an unrestricted. So we'll get to that in a little bit. So interest and dividend income is next. And that's going to be non-operating revenue, okay? So, and when I put this in, it's kind of strange. It doesn't have dividend income. It's just interest income. This is the right account. I'm surprised it doesn't say interest and dividend income. It seems like it should, but it's just interest income. $92,500. Okay, and that's positive because it's revenue. Okay. Let's go to our for next expenses. Our expenses now. We've got personnel expense. Okay, so that's going to come down here under operating expenses as personnel. And that dollar amount is $1,034,000. Like so. We've got utilities expense next. That dollar amount, $188,500. $188,500. Gets us to repairs and maintenance, 82,100. So 82,100. This is going to be repairs and maintenance. Supplies expense is 67,200. Let the 2 out. Write that. This will be supplies expense. We got one more, don't we? Okay, depreciation. Okay, 136,960. So 136,960. Depreciation. Now we got one more. Now this is interest expense. Okay, and so it's going to be non-operating. It'll be down there with the other one, with the one we just did. So it'll be down there with interest income. So down here, interest expense. This is going to be a big negative, right? Because it's an expense. Negative 323840. Negative 323840. So now we got to have a net position beginning, okay? So there's 3 accounts. So to figure that out, we got to add these 3 guys together, right? So we're just going to combine them all into one net position. We'll worry about the breakdown of those later in our statements. So I'm going to add them together, 84030 plus 2040000 plus 92,500. What does it look right? Maybe. Let's type in what I got. 2216530. We'll check it. I don't know if that's right or not. Yeah, I think I had it wrong. I'm gonna try it again. 84030 plus 92,500. That one. Well, I got the wrong numbers. What am I doing? Here we go. It's these numbers, right? Come on now. It's the net position. So I for some reason I don't know what I was doing, but it's those numbers, right? Duh. Okay, here we go. 174,010 plus 867,000 plus 84,030. There we go. Oh, that's much better looking. 1125040. There we go. Wow, wasn't even close. It's all right. People make mistakes, right? Hopefully you caught me when I was doing it and said, why is he doing it that way? It's wrong. You're going to get it wrong, coach. And there we go. So that's got us happy now, right? So that was actually pretty easy, too. The only hard part, which I found hard, was trying to add up the net positions because for some reason I chose some accounts that weren't net position. Anyway, easy peasy. Let's move on to number 3. Okay. So number 3... is balance sheet, right? Well, I say balance sheet. It's statement of net position, which is essentially the balance sheet. It's going to be what? Current assets plus deferred outflows minus liabilities minus deferred inflows equals net position. There we go. All right. So really, so now we're working essentially these accounts, okay? And then we'll have to do something with the net position too, okay, to get it to balance. All right. So let's start with cash and equivalents. That's to be 182,240. Okay. Accounts receivable is 5,225. Receivable REC. There we go. Supplies 8,225. Supplies, okay, that's easy enough. Now we got restricted cash and cash equivalents. Okay, that's on here too. That's 942,000. Okay, so 942,000. All right, that gets us to capital assets next, which is our our capital assets is land, building, land, and improvements. Okay, so that's this section here. Ooh, right there. Okay, got it. So we got land. We'll do land first, which is looks like it's because there's no depreciation spot for it, so that sounds appropriate. So land here, this is $1.4 million. So 1400000. Too many zeros. Perfect. Building and equipment, $925,000. So $925,000. Now we gotta subtract out our allowance for depreciation, less the allowance for depreciation. Now I don't think you had to put these in as negatives, but I prefer to have them in as negatives to see this to show the parentheses. So I'm gonna put these in as a negative number, but allowance for depreciation. So 41,625. It must be a pretty new building because there's not much depreciation on it yet. Put it as a negative so I can see the parentheses. Now technically it says less, so you probably don't need the parentheses, but I prefer to see them. Our improvements other than buildings is $4,715,000. Okay, and then we're gonna do less allowance again. And again, I'll put it as a negative just because I like to see the negatives. Okay, here we go. 212,175. So negative 212,175. All right, so that should be our capital, our total assets. Can I even check that? I don't think I can. It'll give me some checks, but there's no checks over here. So we'll check it before we leave, before we're done, of course. All right, so now we're down to our current liabilities. We've got two right here. We got accounts payable essentially, and then also the current portion of long-term debt. So account and accrued payables, and then long-term debt, current portion of long-term debt. Perfect. All right. 22,150 for the accruals, and then our current portion is 281,600. 281,600. Okay. And then this is our bonds payable, right? Our big number is going to be down here. How much is bonds payable? Ooh, goodness. $6,195,200. $6,195,200. Okay. Now. All right. Net position. Here's our restricted net position here. Now, if you notice, it says up here that our net position, this would have been last year, right? This would be our beginning net position, right? Our beginning restricted net position would be right here, 86,700, and now it's been bumped up to 94. We would have to do an entry here to get this number to match this number here. So there will be a credit to this restricted amount to bring in this amount here. So this is our current net position in restricted assets, okay, restricted cash. Okay, so maybe it's some sort of a debt covenant where we got to keep that amount reserved for the debt payments on that big bond. So 942 is going to be our restricted amount there. Now, the net investment of capital assets, okay, net investment in capital assets is also something you got to calculate too. We've got right here our total capital assets, $6,786,200, and we've got to subtract from that the debt, which is going to be this payment, this current payment plus the long-term debt. So to figure out this restricted amount or this investment in capital assets, okay, I'm going to take this $6,786,200, okay, right here. Let me highlight it for you. Well, I got my mouse over it. That's going to be my okay. I'm going to subtract from it this number right here. I don't want to click on it. 281,600. Okay, so I'm subtracting that. And I'm also going to subtract the bonds payable amount of $6,195,200. Nope, 195,200. So I'm coming up with 309,400. Hopefully that's right. 309,400. Let me check it before I go forward. Beautiful. And so now unrestricted, well, unrestricted was what's left. Okay, well, how do I know what that is? I gotta go back to the previous statement, right? So for number 2 down here, here's my ending net position right here at the bottom, right? So I gotta do 1424940. Get out of here. Okay. 1424940, which is that number right there. You see it on screen? And we gotta back out the the investment and then the restricted amount. So I gotta subtract from it 309,400 and then subtract from that 942,000. Coming up with 173,540. 173,540. So this equals the previous page now. And ta-da! Okay, complete and correct. Okay, there's number 3 for you. Done perfectly. All right, now let's do our cash flow statement. Okay, we'll have to refer to a few of these statements early in a minute. So, number 4 here, money. All right. Okay. It's weird because down this is remember we gotta do it direct method, but down here it's got some reconciliation to kind of show you the whole indirect method kind of built in. I don't know if that's standard or not. I think it's just kind of for this problem, right? It's just to show you that's the same thing. All right, so we got to use this 1 through 7 to get this stuff plugged in. And then as we go, we'll put the pieces of the puzzle in. It says each year a payment is required on January 1st to retire an equal portion of the bonds payable. Okay, well, we do see that right here. So this must be the principal portion right here. So this 281,600 is going to be cash flow from financing. Okay, it's going to be a principal payment on capital debt, and it's got to be negative, right? Because it's a payment. Okay, 281,600. Okay, and we do have interest on that debt, right? That interest on that debt's down here. It's on that first page. So here's the interest part of it too. 323,840. So negative 323,840. This will be our interest. I think this is the right spot for it, if I remember right. Interest on the interest paid on that debt. Okay. So we're going to do this together because they go hand in hand anyway, right? So that looks good. That gets us to number 3. Equipment was sold for cash and its carrying value. Again, the carrying value doesn't really matter. Okay, we just want to know. Well, it does in this case because that's what we sold it for. So we sold it for this carrying value, which is 92,500. So this is going to be cash from capital because it's we sold a capital asset because it's equipment. So this will be in the same section here. It's going to be proceeds from sale of capital assets. This will be a positive this time because this is inflow. There's not very much though. So there is a big net used by financing. Total cash received from customers. Okay, well that's pretty straightforward. So this tells us where to put in our cash from customers. It's kind of cut off, but I can see it 2038355. Okay, that was easy. And also it says that we have cash received for interest and dividends. Well, that was on the income statement too, and that's going to come down here in the investing section. So interest, and again, whatever reason they totally leave out the dividend part of it, which I find kind of funny. Interest received on investments. We'll get a little more specific there. It's supposed to interest income. And this is going to be 92,500. This is positive. So this would be 92,500. 92,500. Okay. Let's get this other stuff here filled in, which is kind of coming right here. It does say that some of it's restricted. We'll get to that later. There were no other changes to cash during the year. Cash payments. Okay, here's our cash payments. So we got cash paid for personnel. Let me see if I can scroll down a little bit more, not too much. Right there. So we got cash paid to employees. Maybe it's personnel. Yeah. So cash paid to personnel. Negative. Remember, this is a payment 103,800. Okay. Utilities. So cash paid to utilities. Negative 185,800. Cash paid for repairs and maintenance. Again, negative. 86,225. Then it's got that interest on bonds. We already did that, right? We put that in the financing section. So that one's already done. And now we got supplies. So supplies is 65,900. So negative 65,900 for supplies. Let's get the word supplies over here. Supplies. Money. All right. Lots of checks. We still got a lot of blanks to fill in, though. Looks like we're on the right pace. All right. Now, remember what I said on the previous problem. So this restricted amount in net position is for restricted cash from the previous year. So it's like our beginning restricted cash. And it does say, I'll point it out in here just a second. So if our beginning restricted cash is $86,700, okay, so there's our $86,700 is restricted cash. Can you see that? You can see it? Okay. It says here that from this amount received as dividends, there's 75,000 restricted cash. So if I add it to this, right, there's that 942. Okay. So the which I'm saying 942 is like right here, right? That's our new restricted cash amount. Okay. So down here, our beginning restricted cash is 867,000. Our end of the year is 942,000. Okay, that's tricky. Okay, beginning of the year, end of the year. That's an increase of $75,000. All right. Cash and now prior to that, okay, does it tell us our starting cash anywhere? Where's this at? Oh, right there. Beginning balance of cash was. Oh, we haven't got this for you. That's fine. 99,300 is our beginning cash from the previous year. So 99,300 is our beginning, and our ending is up there, right? Our ending's right there. 182,240. So 182,240. So this is our beginning cash. This is our ending cash. So the difference there must be our increase in cash. Okay, which net increase in cash and equivalents. One might be right. Let's do the math. If I got 1124240, is that the right number? Oh, this is all that together. So. I'll let the number out. 1124240. I'm going to do it again. 1124240. Okay, there's our end of the year cash. Subtract from it the 966,300, which is our beginning year cash. I got an increase of 157,940. Look right there. Okay, 157,940. So I'm on pace, right? I'm on pace to get this thing right. This is also our beginning cash and equivalents is right here. We got that right. It's written right there, right? So 966,300. So let's do our reconciliation down here. Okay, operating income. Where did I get that from? Right? You got to go back to number 2. We've got a line right here. Operating income 531,240. Okay, 531,240. 531,240. Okay. Depreciation expense Okay, where's that at? It's right here. So trial balance. 136,960. Okay, so we add that back, right? 136,960. Oh, 136,960. There we go. Now we got to do our changes in their current assets and current liabilities. All right, so we got increase in accounts receivable. Okay, well, here's our beginning accounts receivable. So our ending our ending AR is 5,225. We're going to subtract from that our beginning of 3,580. 35. And so our increase in accounts receivable is 1645. And remember, if a current asset increases and cash decreases, this has got to be a negative, right? This is be a negative impact on cash. 1645. Okay, a decrease in supplies. Okay, so supplies is right here, right? 8225. We're going to subtract from it our beginning in supplies, which was 9,525. So this will be a $1,300 positive because it's a decrease in the current asset is an increase in cash. And then we got to do one more. We should be done. Okay, which is accounts and accrued payables. So we had 22,150 on our trial balance. We started, per the problem, with 28,375, which is a 6225, right? So 6225. So down here, and a decrease in a payable is a decrease in cash. So supposed to be as negative as 6225. Net cash provided by operating activities. Look at this. Okay, net cash provided by operating activities 661,360. That's using the direct method. Then if we did the indirect method, 661,630. That's the same number, right? I think I said it wrong. 661,630 up here, 661,630 down here. So this thing should be around the money. All right. How about that? Complete and correct. All right, guys. So I did the hard the statements, and they actually weren't that hard. There was a few tricks in there. Again, for governmental accounting, this is a lot easier than some of those journal entries, I think, that we have been fighting through. But anyway, I'm getting ready to open up right now with Chapter 7. So Chapter 7 will be, the quiz will be available in about 5 minutes. It's already completed. You got to redo these problems essentially with your own numbers. And also there will be journal entries that I did not cover in any sort of a lecture because I want you to refer to the book this time and see what you can come up with. Now, if you get a ton of them wrong, you can't figure it out, okay? Get back at me. But otherwise, I'm going to put a couple extra check my works in there, too, so you have a few extra check your works in there to make sure you get through these before I open it up. I'll do that. All right? So until then, this is all going to be due on Sunday, the Learn Smart, the Chapter 7 quiz, and you don't have to do you don't have to do this, but it's there if you want to practice it before you do it, the quiz, okay? So until then, we will see you guys probably next Monday, unless I get a bunch of people saying we need help with the journal entries. Then I'll come back live and do that. Also, I will post another question for Chapter 7 in Blackboard. So please keep your eye out for that. I'll have it up here probably this afternoon. Okay. On what's this Wednesday, right? So for April Fool's Day. Okay. Love you guys. Be safe. Social distance. If you need anything, reach out to me, and we will see you guys Monday morning. We'll start looking at fiduciary funds. Okay, if you don't hear from me then. Okay, so enjoy your week. Try to get some sunshine, but don't go see nobody. Okay, be isolated. Read a book outside. Get a little sunshine, a little vitamin D, and we'll see you guys next week. God bless you all. Till then, goodbye.